Well, it gives me great pleasure to welcome on board Pirojsha Godrej, joining us on the channel today to discuss all the progress that has been made through this period and our outlook, of course, going forward as normalcy slowly returns. Pirojsha, thanks so much for joining us.
Great to be with you, Abha.
So let's start off with the big question, of course, and that's always around demand. It's always around really where we're at in the recovery cycle. I remember when we were speaking last year, we were still talking about the recovery given the slowdown the industry was already in. This has really just turned things on its head all over.
Yeah, but I think, as you rightly put it, the sector was actually, unfortunately, in a crisis even before this new crisis. So it's certainly been a double whammy, I think, for the overall real estate sector. I think you had a lot of companies going into this with fairly weak balance sheets, a lot of existing liquidity concerns, existing challenges in attracting customers. So certainly this current situation is going to compound that pain and make things more difficult. At the same time, I don't think it's all doom and gloom. There is a very challenging period. I do think individual developers who are not in a good position might struggle to survive it. But as a sector as a whole, I do believe things will start to do well. And the reason for that is that, there are many reasons to be optimistic, including that affordability of real estate is actually now the best it's been in 20 years, with interest rates at decadal lows, with property prices having now been flat for 6-7 years, in some markets having even declined over that period, and people's income having gone up. Now, of course, that sounds a little bit counterintuitive when we're in the middle of this pandemic, when everybody's very worried about job losses that have already happened or ones that may be slated to happen down the road, or salary cuts that could happen. But I do think that, once this situation stabilizes, we'll be in a fairly positive position with affordability looking the best it has. And actually with customers who are quite interested in buying real estate. So, all the data we've seen has shown that the situation we're in has made people more interested in buying homes rather than less. Because I think, having, of course, been locked in our homes for this period, everybody sort of sees the importance of that, and also is seeking the kind of security that home ownership offers.
Absolutely. I think we've been seeing that trend gathering momentum as well. You touched upon interest rates. Today we also saw, the stamp duty cut coming in, which was much awaited. Still perhaps waiting to see something on the ready reckoner rate as well. Do you feel some of these moves will also help to boost demand going forward? Are developers looking at offering further SOPs, over the next 6 months or so?
I think these are, hugely important moves. I think the step the Maharashtra government announced yesterday in terms of cutting stamp duty by 3% was an excellent step and actually very intelligently designed, because if you look at the way they did it, they didn't just cut it and say that it would stay at this level for an undefined period. They quite clearly said that it would be at this level till December and then would go up a little bit till March and then would lapse thereafter. And the reason that's actually much better for the sector than just cutting it without a time frame is that this will actually push fence-sitting home buyers into actually making the purchase decision. So I'd like to compliment the government on the way that this was designed. I think it would be extremely beneficial if other state governments followed suit. Of course, it's too early to say whether this will have the impact it's intended to have. But certainly, I think what we're seeing is that there are a large number of people out there who want to buy homes and whose actual interest in buying homes has gone up further in the last few months. And what has been missing is an incentive or a reason to act quickly, because everybody's a little bit worried about how the economy is going to play out. Everybody thinks they might get a better deal down the road. So I think this kind of an incentive to make a decision and make it in a defined time frame is actually very well thought through. In our own experience, we've actually seen that, again, customers are interested in buying homes. We, in the first quarter of the financial year, when the lockdown was at its most severe, when people's fears were at their most severe, we launched some payment plans which allowed customers to make more back-ended payments. And those were actually very well received. Customers, flocked to the scheme. We saw our sales for Q1 actually increased by about 70% year on year. I think we sold well over 2,000 homes during the quarter. And frankly, we wouldn't have expected that in April, but I think it indicates that if customers feel that they are getting attractive terms or getting an incentive to act quickly, they are willing to do so. So I'm quite hopeful that this stamp duty action taken by the Maharashtra government will in fact benefit the sector. And I think, again, it was a very intelligently designed move.
Wonderful, and we did see that sentiment play out even in terms of the response when it came to stock markets and share prices post that announcement as well. Pirojsha, you've always consistently said you're doing what it takes to really continue to build your market share, and you just touched upon the kind of numbers that you're looking at in sales. Has this period offered you a further opportunity to really consolidate your position, given that homeowners or prospective homeowners are looking at this time for the more trusted brands?
Yes, Abha, I'd put it in two ways. One, I think there's no question the situation, both the current COVID pandemic, but also the overall weakness in the sector going into this, has made absolute sales more challenging for everyone in the sector, including us. So I think our numbers would be even higher were market conditions favorable. But I think there's no question that on a relative basis, which market share would indicate, this has advantaged the stronger developers with strong brand names, because in any case, I think customers for under construction real estate over the last few years have seen a lot of different things go wrong when buying homes, huge delays, in certain cases developers going bankrupt before being able to deliver the home. So I think there was already a significant amount of conservatism coming into the buyer's mind on which set of developers they want to work with. And obviously, I think a situation like COVID, which has put many businesses under financial strain, and has clearly, I think, clarified to customers the even greater importance of only working with developers whose financial stability they are confident in. So there's no question that I think the leading players, including Godrej Properties, will significantly benefit from a consolidation perspective. That consolidation has already been playing out over the last 5 or 7 years quite significantly, but I do think this situation will ensure that process gathers further momentum.
Sure. You did face, as everyone did, challenges, in the beginning when the lockdown first hit with regards to construction, which put a spanner in the works in terms of completing things on time. As labor comes back to work, how are things looking now on ground?
So I think, it's been quite positive, the change. We actually were quite concerned in the first quarter, because what we saw was actually that we managed to retain well over 60% of the labor on our side through the actual lockdown. And, we're able to, of course, make sure they stayed as comfortably as possible during that. But what happened after that was that everybody wanted to return to their homes to see their family, I think, after an event like this. So we saw that 60% number go down to below 30%. And that's been steadily coming up since June. And the most recent number is now north of 70%. So I think we're in a reasonably healthy zone. I think in another 3 or 4 months, we should certainly cross the pre-COVID labor strength. I think that said that, there will be a setback to construction schedules, particularly for the current financial year. So what's happened is that Q1 was almost a total write-off with, over 2 months of actual completely shut down sites. And since then, it's been gradually ramping up. But I would estimate at this stage, assuming we don't have any secondary major lockdowns and second waves and so on, that we've probably lost about 6 months in terms of construction schedule, which honestly is not the end of the world from an overall project schedule, where we usually would have, a 3-year or so schedule. You can make up a lot of that in terms of commitments to customers. We usually have a buffer that is larger than 6 months, so we're quite hopeful that this should not impact delivery timelines to customers. But what it certainly will impact is kind of reported numbers for the financial year, because all of the accounting in real estate happens on a project completion basis. So the plans for that we would have had at the beginning of the year in terms of the projects we intended to complete during the financial year, because we've lost sort of at least half of the financial year in terms of construction timelines, I think there will be a significant hit to both reported earnings and operating cash flows. But again, I think I see that as more of a temporary effect than something that we can make up in the next year.
Pirojsha, you've had a war chest ready in terms of new properties, land acquisition, gearing up really to create new ventures going forward to cater to the demand in India, and particularly in the 4 metros that you are present in. How are you, or where are you in that process of deploying those funds? Has this caused any delay in that? Because from what I remember, you've always said that times like this are an opportunity to actually find good deals, and we've already seen you identify some key areas for development going forward as well.
But that's right. I think, again, there's no doubt that the opportunity of consolidation is there, both in terms of gaining share of customers' wallet from the broader sector, as well as in terms of taking over additional projects. At the same time, when we last spoke about a year ago, I think business development was probably the most critical priority that Godrej Properties had to deliver to be able to deliver the kind of growth plans we aspired to. And I would say that situation has changed a little bit today, because we actually have done a lot of business development over the last couple of years, with about 50 million square feet of portfolio additions during that period. So I think there certainly will be a lot of good opportunities, because the other developers are struggling, because people are looking to monetize their land. And we certainly hope to partake in some of those opportunities. But if you ask me today, what is the number one priority for Godrej Properties to grow rapidly over the next few years, I'd say, unlike 2 years ago when the answer would have been business development, today I think it's actually managing the pre-launch stage and getting our existing pipeline projects to the market. Unfortunately, this whole COVID situation has delayed the whole regulatory approval machinery a little bit, as governments have kind of rightfully been focused on other issues. But we're quite hopeful that in the second half of this financial year, we will have a record level of new projects to bring to market. And we're quite confident that despite the challenges in the market environment, that these projects will meet a successful reception. So certainly, I think that is the number one priority for the company, getting these projects to market and ensuring they are successfully both sold and constructed. But at the same time, as you rightly pointed out, these are the exact times where business development done at attractive terms in the right locations will create, long-running growth for the company.
What about on the commercial side, Pirojsha? What are the trends that you're observing on that front? We're hearing different things. I'd love to hear what you're seeing on ground.
I think, to be perfectly honest, I think I'm at this stage even personally quite confused about how all of this will play out. There are a lot of unknown factors. Yeah. Obviously, we've all been working from home. I think we've all seen that some aspects of working from home actually work great. And there are certainly things that will stay in this current format. But I, on balance, probably think that things will change less than people are estimating they will currently. It's one thing to work from home for six months and another thing to work from home indefinitely. I think ultimately the collaboration of meeting co-workers, informal meetings and the like are quite important parts of creating a successful corporate culture. So my guess is that office will hold reasonably stable and do better than many think. That said, I think, the jury is still out, because there are competing effects. You have seen some companies say, hey, we just don't need this physical space. We can move to a entirely work from home setup or an 80% work from home setup. I've spoken to other companies who are saying that they will actually see a significant increase in their corporate space requirement, because what this is going to require is a huge amount of space per person in an office compared to a typical layout that was prevalent before this situation, and that actually they're going to have to cater to that. So I think the honest answer is I don't know at this stage. My guess is that it'll be a slow year for leasing, but that the corporate real estate sector will be more resilient than many expect at this stage. And I think we've been encouraged to see, most of our focus from a development perspective is on residential, but we do have a little bit of commercial development, including one project that's about to complete in the current financial year. And we've been encouraged to see, we announced a significant lease transaction closure last quarter. We're on the verge of another big one this quarter. So I think, it's certainly not the case that everybody's things have come to a grinding halt, but a lot of companies are saying they're going to, reevaluate and wait and see how things play out over the next few months before taking a decision. So I would say, between the different asset classes, I'm actually most optimistic on residential, where I think both the need and customer intent to purchase has actually gone up. And the only thing holding it back is this little bit of negative sentiment about the overall economy and concern about job prospects and so on.
Is financing also playing on sentiment at the moment, Pirojsha, in terms of loan availability or creditworthiness, given that people are currently losing jobs?
I think, from a company perspective, it depends on the individual player within the sector. Certainly for us, we've seen liquidity and cost of finance both at all-time highs. We actually last month did a NCD issue where we raised about 1,000 crore at an interest rate of 7.5%, which we believe is the lowest ever in the real estate sector. Whereas obviously other developers are greatly struggling in accessing finance in many cases. From a customer perspective, I think there is, increased wariness from lenders in ensuring that, customers are of a strong credit profile. At the same time, this is one area where a lot of the big banks are actually focusing, growing their lending book at the moment. So if you look at it, mortgage rates are currently the lowest they've been in recent memory. And you have a lot of banks that are looking to grow their books. So I think customers of the right profile with the financial stability who can afford these homes are able to access finance reasonably easily.
So your strategy as well from a company perspective on debt currently, what kind of levels there are and the plans on that front, if you could just update us on that as well?
Yeah, so Abha, what we've always said ever since our IPO now more than 10 years ago is that we actually want to have some debt on our balance sheet and actually look at it as a key sort of part of our financial strategy for growing the company. So I think, it's quite popular these days to say we want to be zero debt and so on. Godrej Properties has zero aspiration to become zero net debt. I actually think that would be a sign that we weren't growing the business in an optimal manner. Our current gearing is actually very low. We're at, I think we ended Q1 at something like 0.35 is to 1. Our target range is about 1:1. We used to say 1:1 to 1.5 to 1. I think given the current size of the balance sheet, about 1:1 sounds like the ideal position. So we do have some room to grow debt, and I do expect to see debt levels increase during the year as we bring all of these new projects we've added to the portfolio, get them ready for launch, and as we also close new business development deals. So, I think we're expecting to end the year somewhere in the 1:1 kind of debt equity range.
Also within the markets as well, what are the trends that you're observing? You've been very pro the Gurgaon NCR market and have been focusing there in the past. More recently, even Bangalore is now becoming front and center. Is Mumbai still lagging behind? How would you describe the trends currently?
Yeah, I think we've been trying to focus disproportionately on the top 4 markets in the country, which are Mumbai, NCR, Bangalore, and Pune. And I think we've been, reasonably successful in all. We had over 1,000 crore of sales in each of the 4 markets last financial year. But, I think we've had a little bit more success in business development so far in Pune and NCR, and therefore those were the 2 biggest markets for us last year. Each had about 1,500 crore of sales. But actually Bombay and Bangalore are the big focus markets for us now, and actually from a new business development perspective, last year Bombay was actually the biggest contributor. I think we had something like 6 or 7 new projects that we added in Bombay, including some fairly large ones. So I think as those come to market, hopefully later this financial year or next financial year, you'll see the Bombay contribution to our overall sales go up quite markedly. I think Bangalore is an area where we think our business development over the last couple of years has lagged a little bit. And that is the one market where we see significant opportunities to strengthen the portfolio and is a big focus market for us from a business development perspective this financial year. And, in the other three markets, we feel the portfolio is in a pretty strong shape to deliver rapid growth as soon as we're able to bring these projects to market.
Okay, fabulous. Pirojsha, as we look at property as an asset class, it's been lagging, of course, the last few years. And I know these are difficult times because things are so uncertain. But when do you actually see things turning around, even if it's a few years down the line? But what's your sense really when it comes to property also as an asset class, as an investment versus, of course, the home buyer sentiment?
I'm not sure your viewers should pay too much attention to my views on this because, I've probably been wrong by saying we felt it's about 12 months away several times for several years. But we seem to be able to keep coming up with a new crisis for the sector, whether it's COVID or demonetization or the NBFC crisis.
Yeah.
It's a long list. So I'm not sure, again, that my views on timing have proved to be worth very much. But I'd say, look, I think this idea that the real estate sector is dead or is going to, not come back indefinitely seems a little bit silly to me. I think it is a highly cyclical sector. It's proven that both in India and globally repeatedly. And that, the reason for its cyclicality, by the way, is that it is a long gestation sector. And when things are bad, everyone thinks they will remain so indefinitely. You don't have a lot of fresh supply getting created. And you have, once demand revives, a situation of, the balance being in favor of supply. On the other hand, when things are good, a lot of developers and in new companies that become developers plan projects, the market becomes oversupplied, and then the next leg of the cycle starts. So my view is this time isn't any different. It's just the timing of the cycle has perhaps been stretched to something it wouldn't have been without these few crises that have come along. And I actually think that you could see once the economy starts doing better and once sentiment about the economy improves, you can see the makings of the next upcycle already falling into place. And those would include the affordability, as I mentioned, being now the best it's been in 20 years, with interest rates at decadal lows, with property prices having come down, with people's income, despite being under a bit of threat now, having gone up considerably over the last 6 or 7 years while property prices have been flat. So I think all of that indicates to me that what is missing and what is the reason that you haven't already seen a recovery is that, again, you've had these economic shocks, and those economic shocks have made potential home buyers wary of actually taking the decision and have made them prefer to sort of wait and watch with the hope that prices further correct. That cycle can unwind pretty quickly. It doesn't require, GDP growth getting back to extremely robust levels. It just requires that feeling that the economy is improving rather than worsening to take hold. And I think once that sentiment takes hold, this sector will do very well. And certainly that's the basis on which we are, planning for our own growth over the next few years.
Pirojsha, it's always lovely talking to you and, hearing your perspective, an in-depth perspective on how things are evolving in the space. And also, it's always infectious to hear your energy and, the aggressiveness with which you are approaching the market. Before we let you go, your experience so far during COVID, how have you been spending your time at home? Has it been unnerving? What's it been like for you?
Well, my wife always says it's a Corona coaster. So, there's some days that are good and some days that are less good. Look, I think it's given everyone a lot of time to kind of focus on important issues. It's obviously been frustrating in many ways to not be able to go out and live normal life. I think, of course, I consider myself and, probably most of your viewers amongst a very privileged set for whom it's been quite manageable, and there has been many positives even to the situation in terms of some aspects of efficiency and so on. But I think obviously it's been a terrible few months for the world as a whole, for the country as a whole. We've seen it firsthand in Godrej Properties in terms of the difficulty migrant laborers have faced. So it has been a very challenging period. Yeah. But I think one that has been filled with learning, one that has been filled with opportunities to introspect. And, hopefully we can all use this time to kind of emerge stronger once this period ends.
Pirojsha, thank you so much and look forward to having you again here soon on ET Now.